The evolution of crypto adoption by banks, protecting against risks and disruptions. The adoption of cryptocurrencies by banks is no longer a far-fetched idea. In fact, it has become a reality, and as the ISO system updates, disruptions are taking place, which are resuming as an update. However, this adoption comes with risks that must be taken into account. In this article, we'll examine the evolution of crypto adoption by banks and the measures they're taking to protect themselves against risks. During the wild west days of cryptocurrencies, anyone with a bank account had the ability to fund a crypto exchange account without fund verification. This put banks at financial risk, and bad actors took advantage of this loophole. In response, payment verification services like Plaid were introduced. Plaid is a mutually trusted source between banks and crypto exchanges, which means that if funds are unavailable, Plaid declines the transaction. Banks and crypto exchanges that use a regulated platform like Plaid are now safe, and Plaid also protects the user. As crypto adoption by banks develops further, Know Your Customer is one of the early steps towards crypto adoption. KYC is a process that requires financial institutions to verify the identity of their customers before providing services. This ensures that banks have a record of their customers' identities and can prevent fraudulent activities. Plaid's introduction also improved the relationship between crypto exchanges and blockchain networks. Cryptocurrency holders can now withdraw their assets to an external wallet. However, not all assets and exchanges are completely developed, and banks need to be cautious when dealing with cryptocurrencies. Bitcoin machines are actively being used in most major cities across the United States. This is another example of crypto adoption that's happening before our eyes. In addition, Cash App, which runs on the Bitcoin Lightning Network, is one of the earlier examples of banks adopting crypto. In conclusion, as the adoption of cryptocurrencies by banks evolves, they must also protect themselves against risks. Measures like payment verification services and KYC have been introduced to prevent fraudulent activities. Banks must also be cautious when dealing with cryptocurrencies, as not all assets and exchanges are completely developed. However, the adoption of cryptocurrencies by banks is a positive development for the crypto ecosystem, and we can expect to see more banks adopting crypto in the future.